All right, it's Monday and it's a new trading week. I've been away from the charts for about a week for holiday travels. I did a lot of work from my phone, a lot of Twitter posts from my phone, and I'm just glad to be back to the charts on an actual computer. I hope everyone had happy holidays, happy Thanksgiving travels. For this video, I want to look at the Dogecoin charts. Two trades or two levels that have recently been hit, and then a few levels to the upside and downside to be looking at to the future. So to start off, I'm actually going to rewind the charts back in time a little bit to about here. That's fine. And I'll show you the two levels that have been hit. There is one to the upside. This is on linear scale. The level to the upside, I was able to start charting after I saw the move down to put in this swing low, and then this move up, and then we started ranging here. I noticed that on this move down, and I'll move to the 1 hour chart for more granularity. I noticed that on this move down here, there were selling imbalances on this impulse downward. Additionally, there was a daily naked VWAP created here, and you can use whatever VWAP indicator you like to determine your naked VWAPs. And then also, if I pull a fib from this high to this low, you'll see that there's a golden pocket right in confluence with the inefficiencies, the imbalances, and the daily naked VWAP. So immediately, as this range is forming, I can know that there is a very important level to the upside here. Additionally, there are also inefficiencies after this low was put in and on the move up. So I took a fib from this low to the range high, and you can see that there's an 886 and a 786 right around those inefficiencies. Additionally, you have a daily level, and I'll move to the daily time frame to show you how that's pulled. It's pulled from the low or the close of this red candle to the open of this green candle here on the daily time frame, and you can see price has not yet revisited this, and price does like to revisit the daily, weekly, or monthly levels. Additionally, I was able to pull a trend-based fib extension from this high to this low and to this high right here. And that puts the 1.0 trend-based fib extension right in confluence with the other levels. So I know right away, as this range is forming, there is an important level to the downside right here and an important level to the upside right here. Additionally, I can see that price is forming this contracting price action, and right here it's creating quite a high volume node. So when this happens, it's likely that when price breaks out of this contracting price action, it's going to move very quickly to the upside or to the downside. Now, it's really hard to determine which side is going to break out to first. So what I like to do is I like to create these levels to the upside and to the downside for higher probability trades on either side. Because trading the apex of this is a lot of times just kind of a 50-50. And what happens quite frequently is that maybe it breaks out to the upside and takes these stop losses right here where shorts entered, and then moves back down to take these stop losses right here where the longs entered, and then move up and then just start ranging again. So I like to mark out these levels to the upside and downside for higher probability trades. Now let's play the price action to see what actually happened. you can see right here, price moved into the level once, twice, 3 times, and then started moving out. What could have been done, the trade that could have been taken here is a long, which I did take, anywhere in this zone. I actually took it, if I zoom in, right here, somewhere in one of these wicks right here. So somewhere here. And you could have put your stop loss down below this swing low right here. Now, if you actually longed this swing low, I'll zoom in. If you actually longed this swing low or this swing low, you could have put your stop loss right below this one to get slightly better risk to reward. But anyways, I'll continue the price action, and I want to go through exactly what happened when we started to front run this upper level here. And I'll go down to the 15-minute chart for more granularity. Right here. This, I noticed, this zone right here was front running this level I had charted out long ahead of time. I know that longs are coming in, or shorts rather, shorts are coming in right here. A lot of those got stopped out right here, but new shorts came in here. Shorts also came in here. And then you can see right here what was happening was that this swing high, traders were shorting these swing failure patterns. You have 1, 2, 3, 4 swing failure patterns here of this high. So you have shorts coming in here as well. These shorts are FOMOing in because they see that this level is being front run. And they don't think they're going to get their chance to enter. So they'll go ahead and enter here thinking they're going to bring their trades down here. Now these shorts were probably mostly stopped out. So I put this on Twitter. I posted something on Twitter saying that front running this level and consolidating below is likely to make this trade a bit more tricky. A short squeeze may be in order here, especially if Bitcoin begins to break out of its consolidation. So what I noticed was that we were consolidating below the resistance. And I see that there's likely a lot of stop losses up here from the shorts. So if price can be pushed up to take these stop losses, those shorts will have to cover their positions. Now when a short is forced to cover their positions is equivalent to a new long. In addition to these shorts covering, which is equivalent to a new long, breakout longs are going to be entering here too, because breakout traders like to enter trades, enter longs when the highs are taken, and they like to enter shorts when the lows are taken. So I knew that once we get to this level, there's actually going to be a lot of buying pressure. So we continue, and we see that we move into the level, and I'll toggle this tweet off. But at this point, I knew that this short right here, or this trade at this level, was actually going to be a tricky trade. And as I watched the data come in and the volume, I didn't like what I was seeing for a short trade, so I did not take a short trade. I expected this to squeeze through. And I did some more technical analysis for the upside, and I'll be sharing that upside level a little bit later. I'll go ahead and remove these, and I'll continue the price action. This is where we're currently at. And I wish I could have gotten this video out a little bit earlier, because This is very interesting what's happening here. But like I said earlier, there were a lot of shorts coming in, front running this level that got stopped out. But what happened here is that when they got stopped out and price moved upwards, traders entered longs up here, thinking price was breaking out and going to the moon. There were also longs entering here at the retrace, putting your stop loss here. So what happens is price actually moves down to take those stop losses. And a long covering their positions, or a long getting stopped out, is equivalent to a new short. So what happens is, even though you would expect this level to act as support now, you had a lot of stop losses here, and so there was quite a lot of selling pressure here, and it managed to break right through. So then what was happening was longs were entering here at these lows. So what happened? Price came down and took those longs. Shorts were entering at these highs. Right here. I'll remove this. And they were putting their stop losses right here. So what happened? After we took those longs, we go up and we take those shorts. Now, when a short is stopped out, it's equivalent to a new long entering. But this is also now a support resistance flip right here. So that has to be considered. Now, other than scalping this, which I'm not doing that currently because I'm making this video, but other than scalping this, I don't really want to take a trade here. What I would rather do is look for higher probability trades to the upside and to the downside. So I'll go ahead and remove these levels that I have to show you what I have to the upside. And this is actually on the log scale. What you can do is take a fib pull. I'll actually go to the hourly chart. From this high down to this low, and you'll see that there's a golden pocket right at the beginning of this high volume node. Additionally, there's an SR flip level here. You can see at that SR flip, what created it was when price came through, put in this swing low, put in this swing low, took the liquidity of this one and moved upward. Came back down, tested it. That confirmed that this was support. Tested it again, consolidated in that support, and then fell through. After it fell through, it back tested it immediately and was rejected. So I know that this is a support resistance flip. It's at the beginning of a high volume node, and it's inside the golden pocket. Additionally, there are inefficiencies as well, or imbalances right here on this move downward. And those inefficiencies are right above this swing high. I'll zoom in. The swing high right here. So anyone who shorted here right now, yeah, they're in profits. And I hope they took profits. But there's imbalances right here that need to be resolved. Additionally, you can take a trend-based fib extension anchored from this low to this high, then pulled back down to this low right here. And you can see there's a 1.618 trend-based fib extension right there. So there's plenty of confluence, and it's confirmed by the volume profile to show that this is going to be an interesting level of resistance. Now, we could actually move up to this level and begin consolidating below resistance like we did at this level right here. If that happens, I'll be looking for a short squeeze at that level. Alternatively, we could come up, tag this level, and that will provide a higher probability short position here. I don't know where the stop loss will be yet. I need more information to determine that, but I would like to take it down to at least right here. You can see that you've got a high volume node, and you have where price action exited this constricting price action, and it's also an SR flip. You can see price came up into that level, up into that level. I'll remove that, and then straight through it. I'll move down to the 15-minute time frame. Additionally, you have these two swing lows right here. So anyone who longed that is going to have their stop loss right in this area, which is a thin area. You can see this move up is pretty thin right here. There's a gap there. Gaps like to be taken out. Additionally, if you take a fib from this low to this high, and I actually think this is better on the linear time frame, just like that, you can see that for the reasons previously mentioned, this is going to act as a level of support, likely. Because not only do you have reasons for a long trade here, it's a good place to take profits if we bounce off of this top level. So I have this level to the upside, and I have this more minor level to the downside. I'll remove some of the chart clutter. But if we look further down, you can see that there are 3 swing lows right here. Now, if you're a really, really large Dogecoin trader and you want to enter a very large long position, you can't just do that anywhere. You have to generate enough liquidity to enter your position. In other words, you have to get people to sell to you. Now, the way to do that is you find swing lows like this, where you know there's going to be a lot of stop losses below them. And you want to hit those stop losses and force those traders to sell to you. Now, I have a reason for price to come down here, and that's the reason. But I also have a reason for price not to come down here. And that's because this move upwards is actually really clean. There wasn't a lot of buying or selling imbalances or single prints or anything like that formed on this move up. It was a really clean move up, and so I don't really see much of a reason to come back down to this level. But if we do, and if we take these lows, it's very possible that we get acceptance back into this high volume node and back into this range right here. This would provide the very, very large Dogecoin traders another opportunity to get into their very large long positions. But again, those large traders likely already got into their positions in this area. And so again, there may not be a good enough reason for price to come back down here. So back to the hourly chart. All right, I hope you got a lot from this video. I hope you learned something. I don't have any more for the Dogecoin charts currently. I will be posting on Twitter. I'll be continuously watching this. As a disclaimer, this is not financial advice. I'm not telling you what you should do with your money. This is for educational purposes only. If I'm talking about trading, I'm talking about paper trading or demo accounts only.